Good morning, everyone, and welcome to our presentation on Comprehensive Accounts Payable Audit. Today, we'll take an in-depth look at the audit scope, procedures, compliance, and best practices that are essential for effective financial oversight. I'm excited to guide you through the key processes, identify potential risks, and discuss the controls that ensure accuracy and accountability in accounts payable. Let's dive into this important topic and explore how thorough audits can strengthen our financial operations. This audit covers a thorough review of all transactions, controls, and processes related to vendor invoices and payments. One of our primary objectives is to verify that all recorded liabilities are complete and accurate, ensuring no obligations are overlooked. We'll also assess how effective the internal controls are in preventing errors or fraudulent activities, which is crucial for maintaining integrity. Another important focus is to confirm that payments are made on time and properly authorized, following the company's policies. Lastly, we'll ensure compliance with both internal procedures and relevant legal regulations, while also identifying opportunities to improve processes and reduce costs. Overall, this audit is essential for protecting the company from financial losses and reputational damage, strengthening the reliability of our financial statements, and supporting smooth operations and strong vendor relationships. Let's walk through the accounts payable process step by step. It all begins with initiation and approval, where a purchase requisition is created and must be approved before moving forward. Next, when goods or services are received, they're matched against the original purchase orders to ensure everything aligns correctly. After that, invoices from vendors are received and carefully verified against both the purchase orders and receipts to confirm accuracy. Once verified, the payments need to be approved through established workflows, ensuring proper authorization. Payments can then be processed via checks, ACH transfers, or wire transfers. Finally, we reconcile the accounts payable ledger to clear any outstanding liabilities, while also maintaining accurate vendor records and sustaining ongoing communication. This thorough process helps maintain financial accuracy and healthy vendor relationships. When it comes to accounts payable, there are a few key risks that we need to keep a close eye on. First is the risk of fraud and unauthorized payments. This can happen when false or duplicate vendor invoices slip through, or payments get processed without the proper approvals. It's crucial to have controls in place to prevent this kind of misuse. Next, data accuracy plays a big role. Errors in entering or recording information can lead to inaccurate liability records, and sometimes, duplicate payments occur, which directly impacts the company's finances. Catching these mistakes early helps avoid unnecessary losses. Finally, compliance and internal controls are vital. Late payments can not only result in penalties, but also strain vendor relationships. We must also ensure we're following contractual terms and regulatory requirements properly. Another concern is having inadequate segregation of duties, which weakens our controls and raises the risk of fraud. By addressing these risks, we're protecting the company's assets and maintaining compliance across the board. When auditing accounts payable, the first step is initial planning and gaining a thorough understanding of the entire process. This helps to set the foundation for effective testing. Next, we identify the key internal controls in place, as well as any areas that might carry heightened risk, so we know where to focus our attention. We then select a representative sample of invoices and payments to conduct detailed testing, ensuring the transactions are valid and properly recorded. Vendor confirmation is also essential. This involves directly communicating with vendors to confirm unpaid balances and ensure accuracy. We also test the effectiveness of controls like approval workflows and segregation of duties to make sure they are functioning as intended. Finally, we conduct verification and review procedures, which include checking that all supporting documentation is complete and accurate, looking out for any duplicate or fraudulent payments, and reviewing reconciliations and aging reports to ensure liabilities are cleared in a timely manner. This comprehensive approach helps maintain integrity in the accounts payable process. On this slide, we're looking at the key documents and data sources essential for effective financial management and audit processes. First, we have vendor and payment documentation. Vendor invoices and credit notes are crucial because they detail exactly what amounts are owed or have been adjusted. Alongside these, Payment vouchers and bank statements serve as clear proof of money moving in and out, confirming that payments have been made. The vendor master file is another important resource. It contains vital information about suppliers, including payment instructions, ensuring accuracy and consistency. Next, we have ordering and receipt records. Purchase orders and contractual agreements play a key role by setting out payment terms and providing the necessary authorization for purchases. Goods receipt and delivery notes then confirm that the ordered goods or services were actually received, which helps prevent any discrepancies. Finally, tracking and historical audit data are critical for oversight and accountability. The accounts payable ledger and aging reports help us keep track of outstanding liabilities and when payments are due. Approval logs and audit trails document the review and authorization processes, adding a layer of transparency. Additionally, previous audit reports and management letters give us valuable historical insights and highlight any prior findings that might impact current evaluations. Together, these documents form a comprehensive foundation for managing and auditing financial transactions effectively. Let's talk about key internal controls that help prevent errors and fraud. First, segregation of duties is essential. By separating invoice processing, approval, and payment functions, we reduce the risk that one person can manipulate the entire process. This division creates checks and balances that protect the organization. Next, automated matching and approval workflows play a crucial role. Automating the matching of invoices with purchase orders and receiving reports cuts down on manual errors, making the process more accurate and efficient. Plus, built-in approval workflows enforce authorization limits, which helps stop unauthorized payments before they happen. Finally, vendor reconciliation and monitoring are ongoing activities that keep everything in check. Regularly reconciling vendor statements helps us catch discrepancies early, while periodic reviews of the vendor master file ensure our records stay accurate and legitimate. Additionally, system audit trails and access controls provide transparency and accountability. Training staff on fraud prevention raises awareness and strengthens our overall control environment. Together, these measures create a robust defense against errors and fraud. When conducting a compliance evaluation in an accounts payable audit, several key areas are closely examined. First, we look at adherence to company policies, ensuring all accounts payable procedures are followed according to internal guidelines. Next, we assess tax compliance, making sure that payments align with tax regulations and that tax reporting is accurate. Another critical aspect is verifying that contract terms and payment conditions specified in agreements are properly met. Additionally, the audit monitors compliance with anti-fraud and anti-corruption laws to guard against any illegal activities. Finally, we evaluate the effectiveness of controls designed to prevent unauthorized or illicit payments, helping to protect the organization from financial risks. Each of these points plays a vital role in maintaining the integrity and accuracy of the accounts payable process. When we talk about data analytics and accounts payable audits, one of the first things we focus on is analyzing payment patterns. This helps us spot any anomalies or transactions that don't fit the usual behavior, which can indicate errors or fraud. Next, detecting duplicate payments is crucial. Using algorithms, we can identify repeated payments or unusual activities from vendors that might otherwise go unnoticed. Trend analysis also plays a big role. By looking at invoice volumes and the timing of payments over time, we can uncover irregularities that could signal issues in the approval or processing stages. Predictive analytics takes this a step further by helping us forecast future cash flow needs based on past payment behaviors, providing valuable insight for financial planning. To keep everything under constant watch, continuous monitoring dashboards give us real-time updates on any control breaches, making it easier to react quickly. Finally, data visualization tools are incredibly helpful. They allow us to see patterns and outliers clearly, which is essential for detecting potential fraud early on. Altogether, these techniques make our accounts payable audits more effective and proactive. On this slide, we're focusing on common audit findings and how to address them. First, some of the frequent issues we see include duplicate or fraudulent payments, which can lead to significant financial losses. Another problem is missing or incomplete documentation, which makes it difficult to verify transactions. Sometimes payments are made without the proper approvals, increasing the risk of errors or fraud. Late payments are also a concern, as they can result in penalties and damage supplier relationships. Additionally, inaccurate or outdated vendor information can cause payment errors. To tackle these challenges, it's crucial to strengthen internal controls and refine approval workflows. This helps prevent unauthorized payments and reduces errors right at the source. Conducting regular reconciliations and reviewing vendor statements are also essential for catching discrepancies early and maintaining payment accuracy. Equally important is ongoing staff training. When employees understand the controls and are aware of fraud risks, they become a powerful line of defense in preventing issues before they arise. Finally, leveraging automation and monitoring tools can significantly enhance the process. Automated matching and validation technologies help reduce manual errors, while improved audit trail monitoring and periodic testing ensure we stay compliant consistently. Together, these practices build a robust framework that safeguards financial transactions and minimizes risk exposure. Once the audit is complete, we prepare a comprehensive report that clearly summarizes the scope of the audit, the procedures we followed, our key findings, and actionable recommendations. This report is then presented to management and the audit committee to maintain transparency and ensure everyone is on the same page. We make sure to discuss not only what we found, but also the severity of those findings, along with their potential operational or financial impact. It's crucial to reach a mutual agreement on corrective action plans, specifying who is responsible and setting timelines for implementation. After that, we conduct follow-up monitoring to verify that these corrective measures are effectively addressing the issues. Finally, we retain all documentation to maintain audit trail integrity and provide a reference for future audits. This thorough communication process is essential for fostering accountability and driving continuous improvement within the organization. To improve accounts payable, the first recommendation is to automate and streamline processes. By automating invoice processing and approval workflows, we can significantly boost efficiency while minimizing errors that often occur with manual handling. Next, it's crucial to enhance controls and compliance. This means strengthening internal controls and clearly segregating duties to prevent conflicts and fraud. Regular compliance training is also essential, keeping the team up to date with policies and regulations. Plus, having clear, well-communicated policies and ensuring everyone strictly follows them helps maintain consistency and accountability. Finally, monitoring and auditing for continuous improvement is key. Leveraging data analytics tools allows us to continuously monitor transactions and quickly spot any issues early on. Improving vendor management and verifying the accuracy of the vendor master file reduces risks associated with supplier information. Regular internal audits then provide ongoing assurance and help identify any new risks before they become problems. Together, these steps create a robust, efficient, and compliant accounts payable function. To wrap up, it's crucial to have a comprehensive understanding of the entire accounts payable process, including the associated risks. Strong internal controls and strict adherence to policies and regulations form the foundation for effective management. When conducting audits, we need to apply thorough procedures and use advanced data analytics to uncover any issues. Addressing these findings promptly with structured corrective actions ensures problems don't persist. Finally, continuous monitoring and ongoing process improvements help maintain control effectiveness over time. Collaboration between audit, finance, and operations teams brings a well-rounded perspective, and leveraging technology boosts efficiency, accuracy, and helps minimize risks. By following these best practices, we can strengthen the accounts payable audit process significantly.